Hi everybody, this is Laura McHarrie at The Hidden Edge and
Nigel Davey from SME Needs. So this is one of our 10-minute business podcasts. Today we're talking to Dorothy Brown about the things that businesses fail to consider when financially things go a bit tits up. So I suppose the blind spots, if you want to call them that.
brilliant, and of course what we should do about it. So Dorothy, tell us about you and how you can help us with this particular wicked issue.
Well, I'm Dorothy Brown from Even Keel Financial, and I'm a licensed insolvency practitioner, which means that I can talk to directors and individuals about the debt problems that they have within their companies or in their personal lives, and try and come up with some sort of pragmatic and practical solution for them to get out of the situation that they or their company are in.
So one of those ladies that we desperately need to have at some point in our lives. I can think of at least 2 occasions when your advice would have been very poignant. So what are the big blind spots then, Dorothy? What did I miss out on?
The main thing that people do is not actually have the numbers sitting in front of them. So maybe not have management accounts. They go to their accountant once a year, which is normally 12 months, sometimes up to 18 months behind the 8 ball. And they don't know exactly what's happening numbers-wise, cash-wise. Cash is king. There's no doubt about it. And if you haven't got the cash, then you can't be king. And you can't pay yourself, you can't pay your staff, you can't pay the taxman, you can't pay your suppliers, and then suddenly it all seems to just build up and poof, everything seems to go wrong immediately. And you're trying to firefight, and then suddenly you don't know where to go and don't know who to turn to.
Do you find that people really struggle with being able to identify what they truly believe will come into the till?
Yes, the people are over-optimistic and underestimate their costs and don't really know. I mean, if I say to someone, how much do you owe? And they say, oh, it's about 10. And then we look and see, well, it's about 50 when you add it all up. Because I think the classic of having their head firmly in the sand and taking it out and having a look round, that's what I say that my clients are like. Is that they can't actually believe that it's got that bad, and that they will get out of it. I mean, I saw someone on Monday and they said, oh, we should have done this a year ago, and probably they should have done. But, you know.
What would be your suggestions that people do if they find they've got themselves into a bit of a mess and actually they're not going to make payroll this month for no good reason of their own? You know, Brexit suddenly throws a bomb at them, for example.
Yeah. And I would say the first thing is to go and talk to your accountant. So get yourself an accountant that is easy to talk to, will be listening to you and not be unavailable. If you've got an accountant like that, they should support you, and then you can sit down, take some time and work through it. If at the end of that both sides can see that there is issues, then you come and talk to an insolvency practitioner and see whether there's a turnaround can be done, or whether it's terminal and the company has to be liquidated. The other one is saving for what's going to be happening in the future. So the most obvious one is the VAT. It's not your money. Put it in a separate bank account. When the VAT quarter comes, or maybe at the end of it, there's a little pot left for you, and it's not a surprise that you've got to pay it. I mean, it really isn't a surprise, but the number of people that don't realise that's not their money and start raiding it. The other one is, does the company have to pay something 6 months, 9 months down the line? Say, like in our business, I have to pay for my insolvency license, and that's always the end of the year. So I put away a little bit every month so that when I have to come to pay it, it's paid. I don't have to worry about it. And it's not a huge amount, but if you're putting £50 a month away, it's like your savings at home. If you're saving towards your holiday, you've got that money sitting there. So it's just forward planning a bit and thinking, right, of the money that comes in on this invoice, I know that I've got to put aside this and this and this for future.
One of the things from, I suppose, my knowledge of the role of companies like yours, Dorothy, is that generally people talk to you far too late, and they look at insolvency practitioners as the sort of the death sayer, or sort of that last person who's just going to shut them down, and depending on what side of the fence they are, try and get as much money for the creditors, or try and keep as much money for the directors. I suppose, what would you be your response to that? And I suppose, as a continuation from what you were saying a moment ago, when should they be talking to an insolvency practitioner?
My view is that people talk to us too late. If we can talk to directors when they first realise there's issues, then it's likely that some part or all of the company can be saved. If it's a particular thing that's caused that issue, say the ill health, then we need to think whether that's terminal or not, for the company, not the individual. So it's making sure that you ask and you discuss, and it's just like anything in life, is if you're talking to somebody, you probably will come up with a solution. So there are turnaround specialists, and that's what their jobs are. I think, Laurie, you've certainly done some of that. You've gone into companies, looked at the issues, told them this is what you need to do in order that you don't end up talking to an insolvency practitioner. So if you come and talk to either a business consultant, mentor, or an insolvency practitioner, you should be able to have some sort of discussion about what can be saved. So for me, if I'm going into a company, I'm not necessarily going to come in and say, you've got to shut it down, you've got to finish, everything stops, and walk away. It's, what can I do to make sure that there's something for the director at the end of that discussion, that they've got a forward plan. And whether that forward plan is we close the company down and I go and get a job, or we close the company down and they buy the business back, or we get some cash in and we go off in that direction rather than the direction we were in. So that there is it definitely has to be a forward plan going out of that meeting, because for me, I can't leave people sitting there not knowing what they're going to do, and so that they can have some sleep that night at the end of it. So yeah.
And what would you, I suppose, a lot of people at that point will be going, but I already owe so much money, I'm so behind.
Yeah.
Spending more money I can't afford to spend any more money on sort of professional help. So
Yeah.
what would you say to people who where that's their response?
If they're saying that they can't afford to pay any more money for professional help, is, well, what do you want in your forward life? Do you want to be able to pay the bills and put food on your family's table? Well, a couple of hours of my time isn't actually free first time round. And we get paid as insolvency practitioners, if we're working on a liquidation, from the assets of the company. And the other thing I always say is, insolvency practitioners love to do a deal. So we're not going to say, you have to pay us all and you have to pay us now. It's, what's there? What are we dealing with? It's horses for courses as well. It very much is. Yeah.
Okay.
That's quite interesting, isn't it? One of a couple of experiences, not my personal ones, from was one. There was a lady that I worked with whose husband died of a massive heart attack at 55 or something like that, and she wasn't involved in the business but wanted to continue the business. And by the time I'd got involved with her, it was too late. She'd really got herself into a bit of a mess. So there was that, and then the other one was where two partners had just fallen out, and they didn't have a shareholders agreement in place. Do you, you know, do you see that? Is that frequent? It just things like that, you know,
both
pop
of those
in my head.
Yes, both of those situations I've come across. So my view is, if you can always have two directors, because you can then deal with the situation, because normally the shareholding will be, if it's a husband, in your situation, a husband that died, then the wife would take up the shareholding under the inheritance. And then the other one with the falling out, definitely one of the first things you do when you set up a company, and you've got two people joining together who are, even if they're married, go for a shareholders agreement, because the falling out could be a marital falling out, and then what happens? And you need to think, okay, what's the worst case scenario? This company is a separate legal entity, and there are responsibilities. You need to think about that when you set a company up, definitely.
And the buying out of shares, and interestingly, this is really recent with one of the companies that I'm working with, where they had shares in a different company and wanted to get out of that, but the impact on the main company is still there, because there's a financial implication in terms of how you get rid of, how you buy back, sell off the additional shares. So all sorts of weird and wonderful things you must see, Dorothy, when you're dealing with in your job.
Exactly, and it's the complications that people get, and you think, why have you done this? It's so complicated, when really you're just doing one thing, and you say, well, it's tax reasons. I say, well, what tax reasons have you benefited from, considering the size of your company? So speak to someone and don't bury your head in the sand. We're not frightening. Your accountant's not frightening. If you think that you've got issues, talk to someone. Find a business mentor. Find somebody and say, I need to have somebody to talk to, so I know what I'm doing.
Brilliant. Thank you so much for your tips, Dorothy. That's been fabulous. It would be great if our listeners could make contact with you if needs be. How would they do that?
There's two ways. That's the easiest, the usual one of picking up the phone, and I'm on 01202 237 337. And via email, it's Dorothy, DOROTHY, at Even Keel, which is KEEL, financial.co.uk, or go to our website, which is www.evenkeelfinancial.co.uk.
Right, so that's me, Nigel Davey from SME Needs.
And Laura McHarrie at The Hidden Edge. Contact us for business advice if you ever need us.